Here's a bold statement. Despite President Donald Trump's claims that inflation has been defeated, the numbers tell a different story. And it's one that could have serious consequences for both the White House and the Federal Reserve. But here's where it gets controversial. While Trump insists that grocery prices and mortgage rates are down, inflation has actually ticked up in 3 of the last 4 months, sitting slightly higher than it was a year ago. So, is inflation truly under control, or are we being sold a rosier picture than reality? Let's dive in. In a recent address to the United Nations General Assembly, Trump declared, "Grocery prices are down, mortgage rates are down, and inflation has been defeated." Meanwhile, Federal Reserve Chair Jerome Powell, in a high-profile August speech, acknowledged that inflation remains somewhat elevated, but has dropped from its post-pandemic highs. Yet just days later, the Fed cut its key interest rate for the first time this year, a move that assumes Trump's tariffs will only cause a temporary inflation bump. And this is the part most people miss. If that assumption is wrong, if inflation worsens or stays elevated longer than expected, the Fed's credibility as an inflation fighter could take a serious hit. Why does this matter? The Fed's credibility is crucial for keeping prices stable. If Americans lose faith in the central bank's ability to control inflation, they might demand higher wages or make financial decisions that could trigger an inflationary spiral. For instance, companies often raise prices further to offset higher labor costs, creating a vicious cycle. Karen Dinan, a senior fellow at the Peterson Institute for International Economics, warns that with memories of pandemic-era inflation still fresh, and tariffs driving up import costs, consumers and businesses could start to doubt that inflation will stay low. If that proves to be the case, she says, the Fed's rate cuts will be seen as a mistake in hindsight. So far, Trump's tariffs haven't pushed inflation as high as many economists predicted earlier this year, and it remains well below its 9.1% peak from 3 years ago. However, consumer prices rose 2.9% in August from a year earlier, up from 2.6% last year and above the Fed's 2% target. Grocery prices, for example, jumped 2.7% in August, the largest non-pandemic-related increase since 2015. Coffee prices have soared nearly 21% in the past year, partly due to Trump's 50% import taxes on Brazil, a major coffee exporter, and climate change-induced droughts. Here's the controversial question. Are the Fed's rate cuts and Trump's tariff policies setting the stage for a longer-term inflation problem? Some economists, like Harvard's Jason Furman, argue that it's a big gamble to assume inflation will be transitory. Once upon a time, 3% inflation would have been considered really high, he notes. Meanwhile, companies like Campbell Soups and National Tree Company are already raising prices to offset tariff costs, passing those increases on to consumers. Chris Butler, CEO of National Tree Company, the nation's largest artificial Christmas tree seller, plans to raise prices by about 10% this holiday season due to tariffs. With 45% of his trees made in China, he's also bracing for reduced supply, which could drive industry-wide prices even higher. We can't absorb the entirety of it, Butler admits, so we've had to pass along some of the increases to consumers. Fed officials are split on the issue, while some, like Kansas City Fed President Jeffrey Schmid, warn that inflation driven by a loss of confidence is harder to fight. Others, like Fed Governor Stephen Mirren, argue that slowing rental costs and reduced immigration will cool inflation pressures. But here's the real question for you. Is the Fed's optimism justified, or are we overlooking a potential inflationary storm on the horizon? Let us know your thoughts in the comments. This debate is far from over.